So on this week's show, we're going to talk about something I absolutely cannot stand, but DeLynn happens to love. So this is going to be her show this week. DeLynn, here's to you. Take it over, baby.
I don't think I love this. It's just that I'm good at explaining it. That's all.
We'll see what it is. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. So what is the thing that you hate and I don't necessarily love?
I think you love it. I think you love it.
Nobody loves this. What does nobody love when it has to come down to buying a house?
When we talk,
what does nobody love?
Nobody loves closing costs.
Closing costs.
I know. It's really a shame because you're passionate about them. I don't know that you're passionate about the costs themselves, but you are passionate about when you explain it to people.
I know.
So, DeLynn, I'm going to just go ahead and step away from the set.
No, you show. No, sit here. So, you should see. So,
have a good show. Bye-bye.
So our offices are like next to each other. Get back here. And he hears me doing this like 5 million times a day.
I'm gonna come back.
Come on back. Here you
My
go.
coffee's still here.
That's right.
All right. I'll help you out with this, even though it's one of my
know.
least favorite things to talk about. And you know what? Our real estate professionals are probably, they ask all the time.
All the time.
What are closing costs?
Well, yes, I know. And I have to tell you, so it's something that you and I have spoken about frequently, and we're going to be doing one of our lunch and learns on this very topic one of these days. But whatever you do, don't ever say, "Oh, closing costs are 6%."
Right. Yeah, because if
we hear that a lot
on a $300,000 deal, if you did 6%. Which, by the way, is just over the FHA limits, and you could actually get a $300,000 deal now and get 6% closing costs. But that
However,
would mean you would have $18,000 of credit.
And there is no way that closing costs are going to total $18,000.
All right.
At least, you have probably like a
Here's a way to do
smidgen
it.
of a chance.
We looked at this yesterday. Yeah, buy the rate. Remember yesterday? We're like, look, we can get 2.25.
Yeah, we can. Actually, we did. We saw that on the rate sheet.
It was $13,000, but you can get 2.25.
You can get 2.25 on a 30-year fixed rate.
Yeah. All right. So what? You got to pay for it. You know what?
$13,000 in points.
Listen, that's a whole nother show.
It is, and we should do that one of these days as well.
Yeah, talk about because I see companies now. Because rates are coming down.
For years we always did just par rates. Par rate meaning no points or anything. Just here's what the rate is with no points. But you can always pay points and get a lower interest rate. Very rarely do we have people ask that. And I even stopped offering it because nobody ever wanted to do it. But now, maybe
if you're going to stay in the house
sense.
For an extended period of time, it might make sense to look at that option. So
yeah. Sometimes it does.
Sometimes it does. So you need a mortgage professional in your corner
to run those numbers for you and see.
Yes, even makes sense. But if you're going to stay in the house with rates where they are, did you know that applications for refis are at a record pace right now?
Are they really?
Yeah. Yep.
Yeah.
So people are all flocking to see if it makes sense to refi right now. So it's a good time.
It's funny. They used to say the old 2% thing. That's not the rule anymore.
No.
Yeah. No. You have to see if it makes sense. Everybody's situation is different.
Again, that $300,000 deal.
Yeah.
If you have a loan side of $300,000, yeah, it'd be great to lower it by 2%. But what if you lowered it by a quarter?
Right.
And that that could save you thousands of dollars.
And everybody's situation is
so you
different.
got to weigh it out. You weigh it out.
Yeah.
So all right. Anyway, back to your favorite subject.
So this is totally off topic. What we were going to talk
just
about.
roll.
I know we're just rolling. Okay, so we were going to talk about closing costs. So the reason why
she's going to talk about closing costs.
The reason why he says that I love to talk about this is just that I'm one of those people that I always want to know the why behind things. Okay, so what was that? I'm not kidding. So when my father first taught me how to drive a stick shift,
Right.
no,
wait a minute. Hold on. Talk about going off topic.
I know. No, it's just that I want to know the why behind things. I wanted to know when I press the clutch, what's happening under the hood. Why do I have to do this?
You just
So
learned
on
because
closing
you just
costs,
put a slave cylinder
I know.
in your Hummer. Another $900
yeah, I know.
bill.
Another 900. Yeah.
Oh.
Anyway, so I always like to know the why behind things. So I explain closing costs to my clients with the why behind it. So the main thing that people always ask us, they want to know two things. What's my payment and how much do I need to bring it to the closing table? So everything else we say is like, Charlie Brown's teacher. That, we were on the same page there.
Shocking.
I know. So those are the two main things. So let's talk about what you have to bring to closing. So I always, until today, used to say that's broken down into 3 different categories. Number 1 is your down payment. Number 2 is your closing costs themselves, the actual hard costs. There's a lot of people involved from the time you sign a contract until the time you're sitting around a closing table and they're handing you keys.
Sure I can't leave?
I'm positive.
All right.
There's nothing outrageous in there, but there's a whole lot of people, this is what I say to the clients, who are putting things in place to make it so that you can have those keys in your hand. You have underwriters, processors, appraisers, surveyors, title company, title searcher. The state of Florida has their hand out for doc stamps and intangible tax. So all of those things, again, nothing outrageous, but a lot of little things that add up, and they add up pretty quickly. And then the other part of closing costs, the third part, so we have down payment, closing costs, and then the
we
third
talked
part
about down payment last week.
we did. And then the third part is your escrows, which is your taxes and insurance. So those are kind of like the summary cap of what of what we talk.
And now we have a new friend we met today.
I know.
That gave us a 4th bucket, and he talked about those things you pay outside of closing.
The
like
upfront things.
Your upfront, like an inspection fee,
home inspection,
which everybody should get a home
wind
inspection.
mitigation, termite inspection, earnest money. Even though it's not a fee, it is towards her down payment. But there's a lot of things up front that, I guess, because we're in the industry, we don't realize that people don't think of, we don't think of those things because they're not a closing cost, so we're not putting them on our
but they're there.
Estimate.
They do show POC
but they're real fees
on your closing disclosure. They show that they were paid. So when somebody gives you an estimate for closing costs, more than likely they're going to be in there. They're not going to show up. They're going to show up on your final statement per se, but you're not going to have to bring it to closing again.
Right.
Because people say all the time, like, I paid for my appraisal. Why is it on here?
They do that.
See,
and
it's in brackets.
And we're going to tell you that in a minute.
Yeah. It's in a credit. So.
Right.
All right. So go ahead. It's your show. I'm sorry to interrupt.
No, that's all I'm going to say. That's the cap, and we're going to go into detail on kind of like what those things are and how we come up with those numbers.
Listen, DeLynn.
What?
I'm the segue person.
Sorry.
You give the meat and potatoes. We're not ready to segue out. Do you understand?
Okay, well, I got nothing, so go ahead.
All right. Arguably our most dead air ever on a show. How about those Rays, huh? They're doing pretty good. Anyway, no, that's fine. All right, so we're going to get into the meat and potatoes and more details on closing costs and how they should look and how much should they be right after this. We're going to take a quick short break, and we'll be right back after this.
Finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
we're back, everybody, talking about DeLynn's favorite subject.
Closing costs.
Yeah.
Not really favorite subject. Just
sometimes it's hard to get excited about certain things.
yes, and you're right, but I am passionate about it because I do want people to understand it, and I don't want them to get scared of them.
Right.
We hear a lot, sadly, when we're talking to clients that who had spoken to another mortgage company or a bank or something like that, and they didn't tell them any of this. So I explain everything very thoroughly to everyone because I want them to understand that it's not just your down payment that you need, but there's closing costs as well. And I know that you as the realtor partners out there, are uncomfortable in saying the closing costs and things like that periodically because it's not your forte either. So by all means, please tell them.
They do that estimate sheet for the client. So
well, they do that for the seller anyway. When they're a listing agent, they're going to do that. But I don't know.
Some of them do it for the buyers too.
I guess it depends on who you work for. Some of the larger companies, I think, have those kind of sheets, but definitely have them talk to a mortgage person first. And if they're not getting the right answers, or if their lender is not explaining things to them, then please, by all means, have them give us a call. We're happy to explain them.
So here's something.
I am anyway.
That our real estate partners and our buyers need to understand. Different loan programs. DeLynn's going to go into more detail what these closing costs are and the why. But I'm going to tell you different loan programs will allow the seller to pay closing costs. Mm-hmm. And depending on which loan program you pick is going to determine how much the seller can pay. Right. But it's important if you're going to enter into a contract that how much the seller's going to pay, you have to put it as part of your offer. Right. Which a lot of real estate professionals right now are like gun shy about asking for it because it's a seller's market, let's face it. But a lot of, as long as it's a little praise, you can make the numbers work. So the first one on a conventional loan, the seller can pay, meaning Fannie Mae, Freddie Mac, up to 3% of buyers' closing costs and prepaids. Mm-hmm. Okay, so $100,000 purchase, simple math, 3%, $3,000 can be paid by the seller on your behalf. On FHA, it's 6%. So on that same $100,000, $6,000 can be paid by the seller on behalf of the buyer, closing costs and prepaids.
That's why when we're talking to people, we try and find out where they are as far as their assets go, so we know if we need to, when we're pre-approving up front, do we need to put on our pre-approval that we're going to need seller closing costs.
And then the other one, in a lot of cases, on a VA loan, a VA is actually unlimited.
It is, and a lot of people think it's stuck at 4%, and it's not.
It's not stuck at 4%. You can actually do unlimited amounts. Now, there's certain fees, remember, on a VA loan that the veteran is not allowed to pay for.
But very few fees. It used to be more.
Right. There's 4.
There's
4. But I'm going to tell you, if you're a real estate professional, you probably want to include some kind of at least the non-allowables to be paid by the seller. And I think it's probably, call it $1,700 worth, depending on the settlement fee, because that settlement fee by the title company is one of them. And we don't know what that's going to be.
Right.
So anyway, I just want to throw that in. Investment property is 2% capped. So if you're an investor, not only do you have to put a bigger down payment, typically 15% minimum, you can only get the seller to pay up to 2% of your closing costs. So just a little outline there for you on those. So I know you want to talk more about the meat and potatoes. What are the closing costs?
So right. So that's a good summary, very good summary of what the seller can contribute towards. So what are
Back to your show.
So what are those costs? Let's just talk real quick about what the costs are. So like I said, I like to break this part into 2 different categories: your hard costs, or your actual closing costs, and then your escrows for taxes and insurance. So the hard costs themselves, those are like I said, the underwriting fee, processing fee, appraisal, survey, title company, title search, doc stamps, and tangible tax, all of those things that add up, and they're going to add up pretty quickly, like I said, and they're going to add up to probably somewhere between $3,500 and $4,500. No matter how you cut it, they're going to add up to somewhere between $3,500 and $4,500. If it's a larger purchase, like maybe $300,000 or up or something, then it's probably going to be $5,000. But that's a pretty good, most of the time, I would say 90% of the time, your numbers are going to fall in there, okay? In addition to that, then there's your escrows, and that is for your insurance on the house, your taxes on the house. Now, those numbers are a little harder for us to estimate because a lot of times when we're doing pre-approval, we have no idea what the taxes are because they haven't found a house yet. And we have no idea what the insurance is going to be because they haven't found a house yet. Yeah. So on a pre-approval basis, we're just doing some really rough estimating and guesstimating. So, based upon where they're buying. If they're buying in Hillsborough County or Pinellas County, obviously the taxes are higher than if they're buying in Pasco County.
So on the insurance, sounds like a dumb question when I say it out loud, but people say, well, I'm putting my money into escrow to pay my taxes and insurance. Why do I need to pay it up front? Right. So why do they need to pay it up front?
Right. So the answer on that is all insurances, and this is what I tell everyone, all insurances, whether you're paying car insurance. Don't tell me this. I do. You overhear it. Whether you're paying car insurance, house insurance, medical insurance, health insurance, life insurance, it doesn't make a difference. No matter what kind of insurance you're paying, they get paid up front. Then they insure you. They will not insure you until they have payment in their hands. House insurance is no different. So as soon as you pay that first year's premium, so if it's $1,000 a year to insure this house, it's $1,000 that's got to be paid at the closing. And then they'll put insurance on the house. And then your escrows after that for real estate taxes, depending upon what time of year we close.
So not only do they have to pay the premium up front, they have to put more in reserves because the money needs to be there again when the bills due next year. Next year,
exactly. So then we're going to collect all year long so that we have enough money to pay it next year. Now, the real estate taxes, obviously insurance is going to go off of the closing date, 12 months from there. Taxes go off of November. In the state of Florida, no matter where you are in Florida, it's November the taxes are due. So they're going to prorate those real estate taxes depending upon what time of year you close, however many months it is until the next tax bill.
And on insurance, it's typically going to be 1 year, 12 months, plus an additional 2 months. Is that typical?
For insurance?
Yes. So for the reserves, for the escrow for next year. So if it's $1,000 premium, not only do you need the $1,000, but you're going to need another $200 per se.
And keep in mind, for what it's worth, every lender in the entire country does it the same way. We all do it the exact same way. We're regulated that this is how we have to do it. So no one's escrows are going to be different than what we're going to quote.
Wow. Good stuff, DeLynn.
Thank you.
We're going to talk about something more exciting when we come back, though.
Dude, I got this cool.
Consumer Advocate, your host and the consumer quarterback, Brandon Rhymes.
We're back
with our exciting wrap-up of closing costs, I guess.
You know, it's so funny. You had no idea because I always say something right there.
Not only that, so as soon as truth be told, as he segues us by saying we're talking about something really exciting when we come back. As soon as the producer yelled cut, he said to me, what are we going to talk about when we come back?
I don't know, but it'll be exciting. That's the thing. You know what?
All
we
right.
should be. Listen, I don't want to get off topic.
What, a comedy team?
Yeah. We could be like Seinfeld. a show about nothing, but yet
No,
it'd
it's
be
a show
so
about
great. You look
mortgages.
I know we do give a lot of great information.
We do.
But I love our little, little bunny
Our
trails
little-
we go.
I know.
It's fun for me, and hopefully
This
you
is-
like it too.
This is just our brains. This is our brain on
this
drugs.
This is the way we work. All right, so tell me more
All right.
about.
No, so we're just gonna wrap up. So we're gonna do a quick wrap up. All right.
All right,
So we
give the
talked
summary.
about the hard costs.
Give
the
the
summary.
Reader's Digest version, because I'm already sick
Down
of talking about
payment.
closing costs.
Right. Down payment is going to be what it's going to be. Your closing costs. If you say somewhere between $3,500 and $4,500, you're safe. You're safe if you say that. And then on your escrows, for your insurance and your taxes, again, if the insurance is like $1,200 a year and your taxes are another, $1,500 a year or something like that, then depending upon when you close, time of the year and such, you're probably around another $2,500, maybe to $3,000 on escrows. So all told, if you quote your clients somewhere between $6,000 and $8,000 on closing costs,
On a
escrows,
typical
taxes,
loan,
on
not
a typical,
which
not
is
a
maybe
large one,
160 to 200,000
to 200, yeah, or so.
220, somewhere around there.
Right. But
Not
again, it's all
not
guesstimates.
a $350,000 because
Right.
the doc stamps and intangible tax go up. The hard costs
Right.
stay
Some
the
things
same.
are based on loan size, which is why it varies. And obviously taxes and insurance, it's going to vary. So that's why it's not an exact science until we actually have a property. But if you just
Even when we have a
very,
property.
very, very lightly guesstimate somewhere between $6,000 and $8,000, you're going to be safe for the
You're gonna
most
be in the
part.
ballpark.
For the most part, you're in the ballpark, which is a far cry from quoting them 6% of a $300,000
Which is
house,
$18,000.
which is $18,000. It's not even close to that. So don't do percentages anymore. If you just stick to somewhere between 6,000 and 8,000, you're going to be okay.
Be right there.
Yeah.
Or call us. Let us know. All right.
And we'll go into detail with
So
them.
a lot of other things going on besides closing costs, because we have a lot of closings going on.
I know.
What about the condo market? I mean,
Yeah,
you know
so
what? Here's the bottom line. I'm going to tell you, condos are hot. They are smoking hot right now because right now they've kind of lagged the market.
They
and
have.
because
Especially in Florida.
They
Other
have,
parts of the country
because
bounced back before we did.
because of the the market when it tanked, the condos were the first to go. So remember,
were.
if you're looking at a condo, people are going to them now because they want that easy living.
Right. No maintenance.
no maintenance.
Somebody
no
else to
taking
do
care of
their
it.
lawn and
I
make
want
their
someone to paint the
flowers
house.
pretty.
I don't want to worry about the roof. I don't want
Right.
to worry about this. And condos can be a perfect option. And right now, that's your lower cost housing out there. You
Right.
know. But remember, when you're buying a condo, consider the HOA fees because
Right.
if it's $400 a month for fees, you could buy a lot more house
Right.
as well. But if you want that easy living, the
So-
maintenance-free living,
Right.
we won't call it easy because nothing's easy
No.
anymore. You might want to consider looking at the condos because the lending guidelines are changing again.
And that's what I was going to say. So for years, you real estate people out there, you've heard that a lot of lenders weren't doing condos at all. And then when they did start doing condos, you had to have 10% down, or you had to have 20% down, or you had to have 25% down in order to get a condo. So the good news is that just recently they're starting to lighten up on some of those guidelines and such. FHA in particular, and what did you say you looked up? This is kind of interesting. So FHA has an approved condo list. Some of
Yes.
you might know that already, an approved condo list. And what we have to do is we have to go into FHA's system and we have to look it up if somebody wants to buy a house using FHA funding on a condo. And when we look it up, Barry, take it over.
All right. So
I thought this was funny.
I found one approved condo on Pasco County's list. One. I saw tons of condos listed, but one because they didn't renew on
Right.
the HOA. Because remember, not only are we approving the buyer, we're approving the HOA.
Right.
So you
And
have to have
FHA
both
has
of
to
them.
approve the HOA.
They're more, they may be a little more stringent. So,
Right.
But now I'm going to tell you on the conventional side, we have been able to get some condos approved that weren't even on the approved list.
Right.
So,
So
with
they
this-
just take a little bit longer because if they're not already approved by FHA
Yep.
or Fannie Mae or Freddie Mac, then we have to get them on the list. FHA had closed it out and they were not doing any new ones, but they just changed that recently. Now they're doing what's called spot approvals, which Fannie Mae has been doing for a number of years and Freddie Mac, but FHA was not. So starting October 15th, I think
Yeah.
it is, right? October 15th, they're going to start doing spot approvals. So
if you're
that's
showing,
encouraging.
if you're looking at as a buyer or if you're a realtor, now may be the time to start looking at the condo market again because the prices are lower for sure.
Right.
You know, we're seeing some good values there.
Yeah,
so.
we are. We
So,
are.
condos,
And hopefully
we can
open
do
it
them.
up.
All right,
Boy,
so
that's
let's,
weird because for years we've been
yeah,
saying,
we're like, don't buy a condo. And
I
then there's
start to
still,
twitch.
you know, there's still the limited review programs for those
Right.
really hard condos. So if you have a little more down payment money to work with, that may be another option for you. as
And
well.
one day maybe we'll do a show and we'll go a little bit more into what makes a condo project
Sure.
iffy in Fannie Freddie and
So let's talk
FHA's
about
eyes.
upcoming events, DeLynn. What do you got going on?
For our favorite charity, WPBA, West
Yes.
Pasco Business
I
Association.
gotta
So
get dates,
one of the
Dylan.
things that we have coming up, I don't know what he's going to say, but I'm going to say the one that's near and dear to my heart, which is we have an event coming up called Bowling for Boobs.
Which
We've
is a
talked
complete
about it
sellout.
every
It is
year. It is
Tuesday,
sold out at
September
this
24th.
Tuesday, September
the only,
24th. So
the only thing you can get right now
is spectator.
spectators. So we expect a million
And
spectators. A ton of
I
spectators.
was just going to say,
15
spectators can
bucks
come in.
online.
$15 online if you buy ahead of time. If you buy at the door,
If
it's
we can
$20.
get you in.
If we can even fit you in. So this is an event that we started 6 years ago. This will be our 6th year doing this, and it does sell out really fast. So if you do want tickets, do go online to get them that way. It's a fun event. It is for breast cancer awareness. October is Breast Cancer Awareness Month, so we do this the last Tuesday in September to kick off, and it goes to it's a charity. We raise funds for local people
guess
as
what?
well as making strides.
Did I tell you we're the photo booth sponsor?
Yay!
Yeah, so we got a great photo booth. Everybody loves it. So
Everybody has
we're
fun.
sponsoring it. It's such
Nice.
a good thing. What about our upcoming Lunch and Learn, DeLynn? Do we have one of those?
And we do. So
September what?
our September
10th.
10th.
I look.
Look at his calendar. September 10th, we have our Lunch and Learn, and it's going to be
At Carrabba's in Port Richey. And Amber Mariano, state representative, will be our guest speaker. So
Yeah.
we're excited to have her. Amber, thanks for doing this. And she's going to talk about, she's actually in real estate herself. A lot of
Right.
people don't know that. So some of the funds come in here. So
Right.
anyway, good stuff, good things happening. So thank you, everybody, for watching. Don't forget to share our show, like us, and
all that fun stuff. We are today and every day.
moving forward. See you next week, everybody.
Bye-bye.